If you want to leave the UK or US, it may come with a hefty price tag you didn't expect. Yes, you may have to pay the UK or US government a lot of money when you leave the country. I'm talking about a special kind of tax no one tells you about till it's too late. If you own property, assets, or stocks in the US or UK, if you own a business and you're trying to get away from the cost of living crisis, move somewhere like Africa, for example, you must watch this video. I'm going to tell you if you are liable for this tax, how to calculate how much money the government may charge you to leave, and how to avoid paying it if you're smart and plan correctly. This video could save you a ton of money you worked very hard to earn. Pay attention. We all know there's a cost of living crisis in Western nations. The price of food, rent, and fuel is through the roof. In the US, it's stunning how much a grocery shop can cost, where you can easily spend over $100 for the basics. So many of you out there have been considering an exit strategy. Makes sense. Some of you even asked me to help you out with information about moving to Africa. Over the last few months, I've been working on an ebook guide called the Back to Africa Handbook to help my community plan for visiting or moving to Africa. I'll tell you more about how to get it later in this video, but this is the thing. In my research on advice and tips for UK and US residents moving to Africa, I discovered something I'd never heard of before.
A tax that could seriously impact people leaving those countries for good.
It's called the capital gains tax, and its brutality will shock you. In the UK or the US, you're taxed on the profit you make from selling assets like property, stocks, or businesses. This simply means whatever you acquired your home, land, stocks, or properties for, subtract it from the value of them when you want to leave the UK or US. Yes, you get taxed on your profit gains, hence the term capital gains tax. There are differences between how the US and UK do it though. In the UK, you get a £6,000 tax-free allowance each year, meaning only profits above that are taxed. In the US, there's no exemption, but if you're selling your primary home, you can exclude up to $250,000 if you're single or $500,000 if you're married. Now, when it comes to short-term gains, assets held for less than a year, the US hits you harder, taxing it as regular income with rates reaching up to, I can't believe this, up to 37%. 37% tax on your profits from asset sales. The UK, on the other hand, doesn't have special rates for short-term gains. The same rates apply across the board. For long-term gains held over a year, the US rewards patience, taxing profits at a maximum of 20%, but can even be 0% depending on your income. Basically, if you don't make a lot of money, you might be able to get away with very low tax when you leave America. In the UK, they don't let you get off for any reason. With long-term gains, the capital gains tax is 10% for basic rate taxpayers in the UK and 20% for higher earners. Now let's talk specifically about selling property. In the UK, if it's a second home, expect to pay 18% or 28% in taxes, depending on your income level. But in the US, selling your primary home comes with a big tax break, up to that $500,000 I spoke of. And don't forget about retirement accounts. While in the US, gains in 401ks or IRAs aren't taxed until you withdraw the money, in the UK, there's no specific capital gains tax shelter like that. The UK offers a flat annual exemption and different property rules, while the US gives you more favorable rates for long-term gains and home sales, but taxes short-term profits more heavily. Timing your sales and knowing these differences can save you big on taxes. How to time it right is a whole other issue, especially if you own multiple types of assets in your portfolio, as many of my viewers in the US and UK do. If you do well for yourself, I'm talking thousands and thousands of dollars or pounds back in your pocket to help you move. These are your profits from your smart investments. There's no reason to have to give almost 40% of it to the government of a country you're leaving. I'm definitely going to include a chapter on capital gains and how to navigate it in the Back to Africa Handbook. I delayed the release of the handbook due to things like this. I want to make sure it prepares you properly for what a move to Africa could really entail, both mentally and financially. These are things no one tells us about. This exit tax and how it can affect you is critical information, and I want you to have it at your fingertips to help you plan your visit or move more effectively and efficiently. To get on the waitlist for the handbook, click on the link in the description below, and feel free to make any suggestions of what else you want me to include before its release.